See, also, if we look at the FII inflows, last year, I mean, estimate 26 is negative so far. Initially, before even the Iraq, before the Iran war, it was already bad because of this AI issue. So January it was negative, February it improved, March onward. March was very bad. This is about 1 lakh crore, more than 1 lakh crore was net negative. Like that, March, April, May, June, July, August better. July is positive 20,000. August so far is 25,000 crore. So it has improved. The reason is also maybe the craze of the AI has come down a bit. Now it's not that everything is bad, but only thing our investors in our country, especially the new investors who has joined in last 10 years, they have never seen a dip. So they are
Yes,
very
that was
frustrated.
a very, very dangerous story
They have
that I
never
have
seen a
built
dip.
in.
But I'll tell you one more point. If you look at the last 21 years data of National Stock Exchange Nifty, it has gone as high as year wise. I'm thinking calendar year wise, as high as 77% plus, as low as minus 51%. And this is in consecutive year. 2008, it was minus 51%. 2009, it was 77% plus. So, of course, overall last 20 years, 1 year's average is around 11-12%.
Namaskar, this is Pratim Ranjan Bose, and you are watching Podcast with Pratim. I have with me Mr. Subhendu Moitra, longtime friend and a regular on this platform. He is an investment banker, the director of Was Advisors. Subhendu, welcome once again. So today's discussion is about the share market. Some fund manager study recently claimed that it is the least preferred stock market. Among the least preferred in the region. It was among the most preferred, mind you. So the basic idea is that the foreign investors have moved out. That is why it is least preferred to the foreign investors. The reason is simple. The foreign investors are now running after the AI boom. So they are investing in markets wherever they are artificial intelligence stocks. India doesn't have many such options or have limited options. So they are going to Taiwan, Korea, etc., etc. So that takes us to the question, Subhendu. How do you see the prospect? Where do we stand? How long should it take to correct things? Over to you.
Yeah, you're very right that our market is, as compared to those other Asian markets named by you, are not doing so well. Rather, it's doing badly. Last 1 year, actually, there has been in Nifty, there has been actually a loss if you take a 1 year period. Now, having said that,
If
this
we
is
can
for a
just maintain,
period.
if we can just mention the BSE from 80,000 to, if we take just exactly 1
Yeah,
month, 1 year, 52 weeks, then it is from 80,000 to around 76 or so.
77 today.
77
So
today.
not 80, actually, it has gone up also in between.
No,
So
yeah. So that is what I am mentioning. The peak was 84,000.
yes. So the point is, this is for 1 year. But as you very rightly said, at various periods you have to take that. And reason also, as you said, that we don't have AI stocks, we don't have semicon stocks, which Taiwan has, which Korea has, of course, US has. So that's why our market is lagging behind. Just accept that. Now, of course, when it will be doing well is very difficult. So it's actually, if anybody could have predicted, you would bring me billionaire, millionaire kind of thing. But see, also, if we look at the FII inflows, last year, I mean, estimate 26 is negative so far. Initially, before even the Iraq, before the Iran war, it was already bad because of this AI issue. So January it was negative, February it improved, March onward. March was very bad. This is about 1 lakh crore, more than 1 lakh crore was net negative. Like that, March, April, May, June, July, August, better. July is positive 20,000. August so far is 25,000 crore. So it has improved. The reason is also maybe the craze of the AI has come down a bit. Now, there is another questions being asked whether those AI valuations are right or not. Number one. Number two, also, there are various other questions being asked because people are feeling that this, if you have seen recently, Pratim, you see that desktop and laptop prices have gone up, substantially gone up. If you have to buy a desktop or laptop, you would have bought, and every 15, 20 days prices are going up, because I have
Okay.
purchased
I'm
something in
unaware
between.
because I purchased
Yeah,
mine
you don't buy
1 year
now.
ago.
Yes. So last 6 months, 7 months, it's very surprising. The prices have so shot up, and these guys are saying that, well, if you go to that it'll shoot up further because of these all electronic items being expensive, and most of the electronic items are being, I mean, especially semiconductors and are being shifted to the AI. So there's a shortage or whatever you call it. So all prices have
So
shoot up.
they are aligning their production lines, right?
Yes, yes. Aligning means that the supply is going to the, because that's more demanding. They're not bothering about the prices. Like or the cost of this. So I mean, naturally, these priorities have changed. So people have started asking question whether AI is going to ultimately increase the cost, because so far, of course, it will improve the efficiency, or it will be much more, I would say, efficient, or right, or less error or whatever is there. But the prices also are supposed to come down, whether it will do that. Number two, they are believing that there's another question that AI may require a huge power, and that power requirement, power demand, power cost. That's the second question which is being asked.
You're talking about the
Power, water,
data
the resources.
centers, right? You're talking about the data
Yeah,
centers,
AI will require a data center.
right?
Ultimately, AI, you need a data center. So because you have to store all those data, right? So that's what the AI is going to use. So these are all linked. So considering that, uh, there is another questions are being asked that whether it should have that much valuations. So that's why there is some more thinking, this resetting, and also the craze may come down. But as I can also tell you that if you believe that suddenly there are people will say now that, oh, AI will there will bust. If it bust, it will severely hurt the US market, and US economy is linked to the world economy, so our market will be hurt also. Maybe the reason, one positive thing can be that a lot of FI investment which was so far exclusively going to those markets will again come back to India. So that's one point. Now let me come with another point also, the valuations. If you look at the P market wise, of course, P of India is around 2021. Okay, US is 24. There are certain countries which is even more than that, but say Indonesia 9. So India is still a quite a well valued, market, because there is a
But then the
thinking
general
that,
perception was that Indian stocks are overvalued. Why is
yeah,
that?
it was overvalued. So now they believe, but if you right now see the analysis, though the P is still high, it's not, of course, it's not like US or such kind of countries. But see, the Taiwan is 29, 28, 29. So
Mhm.
that way, South Korea is also very high I think at this moment. So my point is that even it is high, but still there is a point that it is still fairly well.
So
Whereas
when
certain
I
markets,
mean, if I may ask you, so when compared to the US, South Korea, etc., so Indian stocks are now fairly valued, right?
that's what though the P is not come down to that extent, still above 20. So it's still being said that fairly valued, because see, the two things happen. One is the what is the right now value, and what is the growth prospect. So there is a belief that Indian internal growth, which you say, which will continue to grow at, so whatever, 6-7% or whatever. So that prediction still is holding with the investor. That's why they are still believing that, well, India should have 21 or more than 21 kind of PE at this moment, and still it is worth, the value is worth. That's what is the thinking. While of course Indonesia was a smaller market, but it's 9. I mean one of the lowest at this moment. So this is one of the point I want to tell you. It's not that everything is bad, but only thing, our investors in our country, especially the new investors who has joined in last 10 years, they have never seen a dip. So they are
Yes,
very
that was
frustrated.
a very, very dangerous story
They have
that I
never
have
seen a
built
dip.
in.
But I'll tell you one more point. If you look at the last 21 years data of National Stock Exchange, Nifty, it has gone as high as year wise, I'm thinking calendar year wise, as high as 77% plus, as low as minus 51%. And this is in consecutive year. 2008, it was minus 51%. 2009, it was 77% plus. So, of course, overall last 20 years, 1 year's average is around 11, 12%. Okay. So, what I want to tell you is that you should not look at 1 year data and start taking your views. But as I said, the new investors in last 10 years, as they have never seen, they're always in the upswing. And a lot of analysts were always telling that, this is a problem which is coming. They always in the ups, they believe the market will always go up, but share market has to come down also sometimes. There will be dips. So that has happened. So a lot of people who are earlier going for SIPs, they have stopped. We know
I have a
there's
question
some
here,
stoppage
just a
happened.
little academic, that the basic problem is that you link your prices to the Nifty or Sensex, right? The index.
Yeah.
Now, it does not necessarily mean that you invested. There are right at this moment, there are certain stocks which are rising, right?
Yes.
So,
Outside
so
that Nifty or index. Yes.
right. So,
But
okay,
but what
so
happens, I'll tell you.
hmm,
What happens, I'll tell you. I mean, so Nifty or Sensex, they adjust those stocks. Of course, right now there'll be some stock going up, down, below. Some are, upward. Somebody is not doing well. They keep on changing. Of course, there is an analysis for that. So that's why we can always say that, these particular stocks give you a fair idea of the overall index. That's the statistics. You have to take a sample. I mean, this is the sample that shows overall index how it looks moving around. Market is moving around. So they keep on changing also. So today, whatever suddenly you are finding certain stocks are doing so well. After some time, you'll find they'll change one couple of stocks there and take some of them up in their
they
index.
do keep on adjusting.
Yes, keep on
And
adjusting. So that's how that's to ensure that market moves like. But having said that, if your internal growth is really the way we feel, 6-7%, the market you should get an average return of up 12%, 11% upward.
right,
That's a general, I mean, very passive kind of
that's
investor.
not coming.
That's not coming right now for 1 year. But overall for a period of time it will come. There are various
Obviously,
analysis also for that.
obviously, I have a one. I invested in one defense fund, and
Yeah.
that gave me huge returns.
Yes, right.
So one has to average it out. You
Yes,
made good
right.
money in when the times were
One.
good, so
Yes,
that should help you to sustain in the rainy days. That's it.
right. Exactly.
So
So in fact,
unfortunately,
there are other analysis also.
our
Uh,
mentality is every year
Always profit.
all always prices will go up and
Like a
always
fixed deposit. Like a fixed
yeah.
deposit. You should always get a fixed return, but it doesn't happen. That's why it is not
So
fixed deposit.
back to the topic, Shubhendu, what are the downsides? Now you said about if the a lot of discussion is already happening, and very interestingly, now the Western media is discussing the economy and stock market disconnect, right? So the US stock market is doing well, but there is a loads of concern about the US economic health,
Right,
right?
right, right. Yes.
So that said, and a lot has been written or spoken about the potential AI bubble burst, and we have seen a couple of them bursting over the last many years. So, so whether what kind of impact you expect if and how soon that may be coming, the AI.
So whether the bust will happen or not, nobody can say. It may be genuine also. Some portion may have a problem. bust may or may not come, because people who are in the AI, they don't believe the bust will come. They said that things will move this way and will make money, keep on making money. There are large investors, they are saying that it will be so much abundance that every prices will come down. You may not require money also after some time, like, some of the large international investors have said. So that thinking also there. But what I just want to tell that, if it happens, if there's a bust happens, we cannot feel that we'll be so happy with that,
I
that things
don't
will be.
expect it to fall altogether. It is not going to be like that. But
Yeah.
obviously, some people, when there is a craze,
Growth may pair. The way it's moving, it may pair down a bit.
number
That's a
one.
possibility.
Number two is that all the investments will not go right.
Yeah, of course. All the investment will not go right. But my point is that, even if actually US market falls, it will not be so good for India as it we will be affected, because we are globalized also. There's a linkage. So there'll be a fall, there'll be effect or negative effect on our market as well. But at the same time, lot of such FI investment which was totally getting directed to such markets may keep on coming to India. If you say last 2 months, because of this thinking, again there's a positive inflow to India, right? So that is another. So it will be balancing a bit, but we don't know exactly ultimately what will happen. But for India, considering our internal growth, we should expect on a longer term a fairly good return. That's what I believe. We should not get so scared that 1 year is bad, 2 year bad, like that. See, if somebody is a long-term investor, they should hold their nerve. That's what I believe. And just don't look at 1 year, 2 year kind of thing, right? Of course, for short-term investors, their money is short-term. They need to worry. But I'm saying long-term investor need not
In
worry.
any case, we generally don't suggest someone investing in the market unless he has a ability to
That's a good idea.
stay invested for at least 7 years,
Absolutely.
right?
Absolutely.
Then otherwise, if you enter in with a very short-term mindset, then sometimes you will gain,
Unless
sometimes you
you're
will lose.
expert. No, and unless you're an expert, you can analyze, you can do technical analysis, that's okay.
So that is
Or
those
you have
people
an
who do
advisor.
this trading in this stock market, directly equities, but
Yeah.
not into the mutual fund, of course.
Yes.
Thank you, Shubhendu,
Thank you.
for joining me. And I think you came after a gap.
Yeah, we'll continue later on. Thank you so
Thank
much.
you. Bye.